Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Wednesday, September the 7th. The year's 2022. Let's talk trading. Trading is all about you, part 6 with Walmal. As always, these videos are for educational purposes only. Your results may differ from mine and differ from Walmal's. Walmal. So, what else did you want to talk to the traders about when it comes to trading? It's all about them.
Yeah, I was thinking about this yesterday. I was doing some reading, after I was done trading and took care of some chores in the house. I went and did some reading and then went outside and did some more work. And I like to go and do that my way. My way of doing the things like that is like I like to go and read something, then go outside and work on something mindless, and I promise I'll get this back to get this back to topic. But what that does is it causes me when I'm doing something mindless outside in the yard, I'm able to go and ruminate over what I just read or what I just heard or whatever. And one of the things I was thinking about, I know you used to say this, and you weren't original to this, but a lot of folks have said it in the past, but and a lot of traders like to say it, and that is trade what you see, not what you think, right? I think you spun it a different way, didn't you? Somehow, if I recall correctly, but that's the whole thing. The big word in there, okay, it's repeated twice, and it's you. Trade what you see, and not what you think. And there's a lot of things in there that really play into what we do as traders, And what do I mean by that? Well, the reality is most traders don't trade what they see, they trade what they think. And when you split, I'm going to go and put a big umbrella on think. And it's under that umbrella, you find things like, emotion, you find, all those different elements, impulsive, wishfulness, dreams, all those things fall under think as opposed to see. Most of us don't go and trade what we see. And because see, I think what it requires us to do is just be extremely, extremely vigilant and objective about what we're seeing happening on the chart, and we need to be making choices as to what we do, okay, based on what we see and not what we think. I could think that price has got to go, I said to you yesterday that price has got to get down to the 1400, and you wisely said, yeah, it probably will, but when does it happen? Does it happen now? Does it happen 5 minutes, an hour, 5 hours, 5 days, and that's the reality. Well, it did get down to the 1400, but the thing is, though, that's what I was thinking it had to go and do. But I can't make a trading plan off of that. I can't trade based on, what I'm thinking is going to happen. I have to go and make a trading plan based on what I'm seeing. So what does that mean? The pragmatic part of you that comes into this is, well, you've got methods. You've got things that you've proven statistically that work over and over and over again. Well, what you do is you go and you wait for that setup to occur, and you take the setup, and if the setup fails, you get out. You don't take the lumps. You take the lump for that one loss, but you don't take a big lump. You take a small lump. And that's what I think is so important that we as traders need to do. It comes down to trading what you see. If it's working out, great, wonderful. If it's not working out, well, get out. Wait for the next opportunity. What you think may be wrong.
Yeah, there's one thing though. I think some people do trade what they think. So, for example, um, you can trade the rat zone. So the pound is 9 pips off the current daily low. So it's in the rat zone. So you could, even though you don't even have to look at the chart per se. But you're looking at the numbers. So you see the numbers, and the numbers are telling you one thing. So whether or not a rat zone trade, if you put it on right now, would work out, you take profit before you stopped out, that's kind of up to you, the trader. But not every trader is, glued to the charts per se.
Right. I would agree with that. And that comes down to, like what I just said a few minutes ago. Yeah, rat trades, they work. There's no question about it. You can see it on the chart. Look at the chart, and every day you see it. And most days you even see it on both ends, and, especially with the pound dollar anyway, you usually see it on both ends. Here's the thing. Just because, we know that happens, we don't know when we get into the trade whether that one's the one that's going to work out. I mean, we're sitting pretty close to the bottom here, and you say, well, hey, I'm in the rat zone. I should be looking for the opportunity to go long. Well, I could go and take a long, and it goes right against me because it hasn't put in the lowest low for the day yet. Well, what do? Well, what you do is, and I said this the other day, you try to minimize how much you lose. Okay, and that's the most important thing. You got to minimize what you lose, and then when the opportunity comes along and you take the trade again, guess what you do? You go and you take the trade, you take your long trade, and it should go and more than make up for what you lost. And again, it comes down to you've got to trade what you see. There are times just because I'm sitting down here and, I'm all the way down almost at, 14.20 here on the pound, which means that we're only, on my chart's 5 pips away from the bottom. I got to go long. Well, that would be foolish. Look at what's happening on the chart. Look at what you see. It's clearly going down. It's clearly going down to go and retest the low for the day, the low for the last 2 years. Why would you take the trade now? There's no reason to take the trade now. You're jumping into muddled waters here if you're looking to take a rat trade. But at the same time, be aware it's probably going to just look at your daily chart, look at your daily candles. They got wicks on both ends usually. There's a reason for that, because when it gets to that extreme, that's when it goes and runs back up towards the middle a little bit.
Exactly. Yeah, I just popped up the daily chart, and yeah, it looks like we did push the low slightly, ever so slightly. But that's just that's a live example of I guess what I'm saying is you don't necessarily it's what you see on the chart, but you have to see if you were watching just the ticker, it's like, hey, the pound seems to be waffling. It was waffling around 25, 23, then all of a sudden it breaks down. It's just like, okay, let's see what happens now.
Right, exactly. And one of the things, I was thinking about this as well, is that why do traders get into trouble? And a lot of times it's because, I should be taking a rat trade. I'm just going to pick on the rat trade. I should be taking a rat trade because I'm within, right now, according to my thing, I'm within 1 pip of the low for the day. Okay? I should be taking a rat trade to go long here. And I'm just going to go and jump in. And I think that the biggest problem is what gets a lot of people into problems is they jump in what I call mid-candle. They're in the middle of the candle. Wait for the candle to close. For a couple of reasons. One, it gives you some time to think, and maybe that's not a good thing. I guess actually I don't want to use the word think. It gives you some time to observe what's happening. I think that's better. Is the market really going and turning around at this point or not? Or are you just getting impatient and wanting it to go the other way so you can take the trade? The reality is, as traders, what do? We spend 90% of our time sitting around staring at a chart, and 10% time we're actually either taking a trade, exiting a trade, or watching a trade. That's just the reality of trading. It can be a very, very boring lifestyle, but the reality is that's what it takes to trade, And so wait for the candle to close, observe what it does, put some time in there, allow you to go and look at that observation, and make a determination and say, have we really bottomed out here or not? I think it causes you to take your finger off the mouse and not just jump into a trade willy-nilly and find yourself, oh crap, I'm now down 5, 10, 15 pips because I jumped in at the wrong spot.
Right. So I just switched over to my rat zone screen and I put it on M5, so you can see you've got a red M5 candle. So not to mention, looking at the multimeter, everything except M1 is red.
Right.
So you'd be trying to swim upstream at the moment.
Right, and that's what you see. Okay, and it's just plain as day. You know, you're sitting there. Yeah, we're at the daily low here right now. You know, and we're banging against that. I don't know if it's going to go and reject that daily low and turn around and run up. 10, 20, 50, 100 pips. I don't know if it's going to do that or not, or nor do I know if it's going to break that and go challenge the low from 2 years ago. I don't know which way it's going to go. So what can I do? I sit here and I observe and I wait to see what's going to happen. And then when I see what's happening, then I can go and do what I need to do to go make money.
Yeah, so we're going to have a new M5 candle in about half a minute. So we can see if it goes to the green, it might come screaming out of the rat zone.
Right. Yeah. Now, the other thing is, I don't trade news, and I know you don't trade news, and you don't put very much credence into the news at all. But the one thing we have to put big credence to is the fact that, news events do move the market. We just don't know which way it's going to move it. And right now we're in New York time right now. It's actually 8:50 in the morning right now. And we do have a news event at 10 o'clock, so we're an hour and 10 minutes. And what that news event is, it's an FOMC member who's going to go and speak. And it's only orange news. But the problem is that over the last couple of weeks, when these, I'll be nice, I was going to say fools. But when these guys go and speak, they have tended to go and say things that have really caused the market to move pretty substantially, sometimes changing the complete direction of the market, after what they say. So we need to go and be careful of that, and then right after that at 12:30 Eastern time, or New York time, we got Brainerd who's going to speak, and so as the ranking member in the FOMC, ranking not meaning that the one who's the president, but rather the one who's been there the longest, his words people tend to regard, and hold in high regard. So it will cause probably some type of movement when he speaks. So know that, keep these things in mind, because that's part of what you see. Because you see that this guy's going to talk, you see the guy coming up. There's a good chance that something is going to happen at those times, and then you can make a decision: do what I do, or do what others do, And what I do, and I've said this many times here, is that I stay clear, on both sides of that announcement until I see the market settle down a little bit into a particular direction. Because once it does settle down and go into a particular direction, that direction seems to go for, a little bit of time. Now, you may not get that big, huge move that you see on the chart, but you get enough of a move where you can make some money on it. And to me, anyway, it seems to be safer to do it that way.
Right. In fact, making money, you could have had 2 to 4 pips on the pound. Did you take that trade?
I did not.
Yeah.
I was jabbering.
Oh, okay. Yeah. So, well, we're just about out of time. But I guess that, one of the things is in this particular case, you're still swimming upstream. So this is when you really take, 1, 2, 3, 4 pips as soon as you can. Because it could, you could get carried back downstream towards your stop very easily.
Oh, absolutely. Now, what you can do is take your 1, 2 pips, get out, and look for the next opportunity to go back up in again, and just take a second opportunity, because it'll present itself. Because the market likes to move from what I call shelves, and maybe we could talk about that tomorrow a little bit. But it likes to move from shelf to shelf.
Yeah.
And
Darvis box to Darvis box. Yeah.
Exactly.
Yeah.
Exactly.
So, fellow traders, once again, the fastest 15 minutes in trading is over. So keep some of these things in mind. Let us know what you see, what you look for, what you look to observe before you trade, because it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.